Beyond Meat's special meeting just delivered some major changes, from increasing authorized shares to 3 billion to approving a reverse stock split. So these moves will directly impact the stocks, and many investors are now wondering, is this a massive buying opportunity right now or a major risk? In this video, we're breaking down all 4 proposals and what they actually mean for BYND going forward. So buckle up and let's dive right in. So let's first look at the charts of Beyond Meat on TradingView. And you can see here that I put the conversion price here at $1.75. That's the price that the creditors can issue their notes into shares. And my average cost price is also around $1.75. So I'm down around 40%, but it's okay. It's now trading at around $1. It's now up in the pre-market. It's at $1. And the price hasn't really reacted too much to the special meeting, yes. But the question is whether the results of this meeting can positively impact the stock to go all the way up, or could there be a major risk? So let's first look at what really happened in the meeting. So I watched the special meeting here on StockTwits. You could have listened to it live, and it was around 15 minutes, so it was not too long. And after listening to it, it was clear that they approved all 4 proposals. So what exactly were those 4 proposals, and how are they going to affect the stock price of BYND in the future? So the first proposal is about the convertible notes. And the proposal is as follows. It's approval for Beyond Meat to issue new shares in the future if the 250 million convertible notes are ever converted into stock. So this one is approved. So this is great for Beyond Meat creditors. So the people, the big institutions, the hedge fund manager that lend money to Beyond Meat, because now they can convert their notes into shares if it's above the conversion price. And once they do that, they have now the right to issue new shares. So it's all possible. So the creditors can now convert when it's above the price, and Beyond Meat makes sure that they can issue new shares for that, which is good for the creditor. So what's the impact on the stock for this? Well, in the short term, no dilution because the price is below $1.75. So that's great. There's no reason that any creditor is going to convert and create new shares. But the long term is the dilution will only if the stock rises a lot. But if that happens, the company is likely recovering. So if the market spikes all the way up, it also shows signs of recovery, which is also good. But yeah, then dilution will happen. So once it goes really, really high, then yeah, they will convert those notes to stock. And that creates more stock in circulation, which will decrease the value of each stock. That will happen. But first, the stock needs to go up like crazy. So for now, no dilution based on this proposal. So let's talk about the second proposal, which is equity incentive plan. So this proposal is as follows. Expansion of the company's 2018 equity incentive plan, so Beyond Meat can grant more stock-based compensation to employees. So they want to pay basically their staff more with shares, and they will issue shares. Now this can create dilution, and that's obviously not good. But they will issue new shares and then pay their staff. But this is not a significant amount of money compared to the whole business, which is great. So this is approved. So they can do that. They can issue new shares to compensate their staff. And what's the impact on the stock? Well, in the short term, slight dilution over time. So gradually it will dilute the shares because they will create more shares. But we are not talking about maybe like 10, 20 million in a year or something. It's not like the 800 million that they diluted before. So this is not, a really big scale, which is fortunate. And in the long term, it can help retain and motivate staff, and it supports turnaround efforts. Now let's talk about the third proposal, authorized shares to 3 billion. Now this is the most controversial proposal because a lot of investors are concerned about this, and for good reason. So what is the proposal? The proposal is increase in authorized shares from 500 million to 3 billion, giving the company flexibility for financing debt management and future stock issuance. And it's also approved. And this means that they now can issue 3 billion shares, and so they have the flexibility and the right to create 3 billion more shares, and that will dilute like insane. But the thing is, they haven't diluted anything, but they can, and that's the whole point. So what's the effect on the stock? So in the short term, no automatic dilution because they can dilute, but right now they got rid of most of their debt through the dilution from before, and now they're 7% notes to the creditor. So they already got rid of their debt, and I don't think they're going to dilute anytime soon. But if there's more trouble in the future, then they have the right to dilute, which means more dilution, and that can be a risk. So for long term, more room for debt reduction, new financing and compensation, and this helps prevent bankruptcy, but dilution depends on future decisions. So if they're going to use this power basically to print like 3 billion shares, then they can use it for all these things to avoid bankruptcy, and that keeps the company longer alive. But eventually it's going to collapse if they're going to overuse this power. So I hope they are not going to use this power as much. Now the final proposal, the fourth proposal, which is the reverse stock split. And what does that mean? Well, this proposal means authorization of a reverse stock split, allowing the company to reduce the number of shares and increase the share price to maintain Nasdaq listing and restructure the share count. And this one is approved as well. So everything is approved in the meeting. And this basically means that if they want to do a reverse stock split, they have now the authorization to do that, which means that, let's say one share is now $1. Then after the reverse stock split, so let's say you own 10 shares of $1, now you have one share of $10. So it's exactly the same. Nothing changes. Everything will be the same. It just looks better on paper. And it's also for Nasdaq, because if a stock is under $1 for over 180 days, then it has to be delisted from the Nasdaq. And they want to avoid that. So that's why they do the reverse stock split. It becomes trading at $10 again, for example. But everything is calculated in. So nothing to worry about. This is basically your shares will automatically convert. And what's the impact on the stock? In the short term, the price rises, total value stays same, higher volatility. So the price will be higher because it's reverse stock split. And the total value stays the same. So everything stays the same. It will all be automated in your broker. You will just get less shares, but there will be a higher price. And this could also be a possible squeeze interest. We can talk about that later. And long term, it doesn't fix fundamentals. It doesn't do anything, the reverse stock split. It helps stays listed on Nasdaq. It's the runway of this company to prolong this runway in the company. That's good. And it's better for institutional perception. It looks better once the price is higher, but it doesn't really do anything, this reverse stock split. So those were like the 4 proposals. Let's do a quick overview. The first proposal is the convertible notes, and it allows issuance of shares only if the new 250 million convertible notes are ever converted. So the creditors have now the power to convert. They want if it's above the conversion price. So no dilution now, because they will not do it once it's under $1.75. So no worries for that. So the second proposal is the equity incentive plan. It adds more shares for employees, stock options, and RSUs. And this is small gradual dilution. It's not on a massive scale, but this is obviously not good for the stock. And the third proposal is authorized shares to 3 billion. And it raises maximum shares from 500 million to 3 billion for future flexibility. Now, this is a very controversial one, because on the other hand, you could say there's no automatic dilution right now. They haven't used it, but they have now the power to print unlimited money. It's almost like that. And that can be risky, because once the company overuses this, the company could collapse. And that will be devastating. But if they're careful with it and they're not overusing this, then this could be a good thing to keep the company longer alive and give them more time to be profitable. And the fourth proposal is the reverse stock split. This is just so it looks better on paper. It doesn't change anything. If you have 10 shares, then after the stock split, you have like 1 share. But the 1 share is now $10. So it's basically the same everything. But it can create like higher volatility. So let me show you how I manage my portfolio through this portfolio example. So here you can see that I have like a 4% Beyond Meat position. So I only allocate a small percentage to Beyond Meat. So if Beyond Meat goes to zero, then you lose the 4%. But if it goes like a short squeeze or and it goes to $10, $20, then the upside is still unlimited. So by allocating a small percentage, you now turn a high risk, high reward stock to a low risk, high reward play. It's like you risk $1 to make $10. And that's why diversification is so important. It's the only free lunch in the stock market. So we're back at the charts again on TradingView, and we're looking at Beyond Meat, and it's now below $1. Average price is around the conversion price at $1.75. And I'm not really planning to buy much more, but my last position I want to buy is at 50 cents, maybe because a lot of times you see like a double bottom pattern and then it shoots higher, or we can go directly higher. If it goes to 50 cents, then I will buy my last position. And then if it goes below there, I will just hold diamond hands for like a few years. That's my strategy for now. So through these 4 proposals that were approved, Beyond Meat creates a lot of leverage and time for themselves to fix this company. And that's a good thing. They give themselves time and they're not going to go bankrupt anytime soon because of these proposals that are working in favor of them. Of course, if they are overusing their power with these new $3 billion shares that they can issue, then this stock can collapse. But if they use it wisely and they find a way to turn around, then there is a possibility that this company can turn around and become profitable again in the future. I hope you learned something today. I hope you liked this video. Of course, always do your own research, always do your own due diligence. If you want to stay up to date and like this kind of content, feel free to like and subscribe, and I'll see you in the next video.